Hey, Keith here for My Rich, and today, well, I don't know if you've heard the news, but Warren Buffett apparently bought Suncor Energy stock. So this is a stock I'm going to look into. I was looking at Motley Fool. It's like online kind of publishing company, and they mentioned Warren Buffett, or at least his company, had purchased shares in Suncor Energy last quarter, and so I thought, well, I'd like to look at it now because Warren Buffett's probably one of the best investors, at least long-term value investors, probably the best one in the last 70 years or so. So, Suncor Energy, it's under the ticker symbol SU, and this company is an oil and gas company that has both large mining operations up in Canada and also refining and some distribution of their products. So they're really involved in upstream and downstream for the oil and gas business. And they also are involved with some of the largest reserves and maybe the best parts of the largest reserves in Canada for oil sands. So that's kind of what they do. And now, as far as the numbers go, currently the stock price is sitting at $44.88, and that gives it a PE ratio of 22.2, which is fairly average, I would say. And the forward PE is estimated at around 18.2. So there is expected probably to be a little bit of growth for this company. Its price to book ratio is 1.6, very fair if not cheap, a little bit cheap, and a dividend of 3.7%, which is very nice. And its dividend typically grows, it's very consistent growing, and it typically grows quite well. So that's something to look at as well. The one kind of negative I see of this stock is its 5-year growth rate is minus 2.4%, but that also might be kind of a blessing in disguise for this stock. So what's the bull or positive thesis on this kind of company? Well, if you were to purchase stock in this company to try and own a part of it, the stock price matters, I think, but generally speaking, I think the company itself, it's gone down in its value for its stock since the decline in oil prices. And it's gone up and down a lot, but oil prices since I think like 2015, they really tanked, and they've come back and kind of gone down a bit and kind of went up. They're all over the place still. But Suncor Energy has been able to produce oil at a cheap enough rate and do some refining in their own, so they've been able to basically stay very well off in these situations. Now, they still struggle a bit, but in general, their cash flow has been very good, and they even have like a management team that they want their cash flow to be a certain ratio of their equity, just to make sure they have good credit all the time, so they can do new things to increase or to grow their projects or to improve their mine, something like that. So it's a company that their management thinks very long-term and very safe. Its price has dropped because of oil has dropped. Now, it's very possible that oil will go up somewhat in the future, and people will still need to use oil. So I see this as either like the oil price likely staying flat or going up, and so that is kind of an additional positive for this company. Another thing is it's in Canada, and if you bought, say like the Canadian stock price, you're getting, you're kind of tying yourself into the Canadian dollar, or even like the dividends are in Canadian dollars. So the main thing about the Canadian dollar is traditionally it kind of hovers along at a certain ratio with like a certain rate. It kind of follows a certain growth trajectory as the American dollar. But as soon as resources, like Canada is kind of a bet on resources. So even though its price is usually kind of mimics the American dollar, it's usually quite a bit lower. So like say 70%, 65% of what the American dollar is. But then every so often when all sorts of mineral prices go up or oil prices go up, the Canadian economy benefits a lot. And then you can have times when the Canadian dollar would be worth more than the American dollar. So you can kind of see there's an extra potential for if oil prices shoot up, or even if just like, copper prices, nickel prices, whatever, some kind of resource prices go up, you could see the Canadian economy pushing up, and you could see an appreciation, like 30% just in the value of these kind of investments. So there is that extra benefit. The other thing is the price. So it has a good moat because it's involved in the oil sands that are like one of the largest oil deposits in the world, and it has some of the best leases on these properties, or on these oil sand deposits. So it's there to it's in very good, well situated. And another thing is, even though they can refine and sell their products for a little bit better price, some of their raw products also have trouble getting to market. So there's kind of a backlog often these days for oil. And so there's been a lot of pressure in Canada to get additional pipelines capacity to the west coast of Canada as well as to the United States for further shipments of these oils. Because right now, because of the bottleneck, people pay a lot less money than the global price for oil for these kind of products from Canada. So if they can get it to market easier, if new pipelines are built or approved, then you could see Suncor as one of the companies who benefits from this, that they'll get quite a nice spike in their profits. Because if they're producing at a certain price, the amount it costs to produce that oil doesn't go up very significantly, even if the price of the commodity goes up significantly. So their earnings will increase very fast, just with minor increases in the price of oil. So I could see that as a huge positive. So that's basically what I think is really positive with this company. And as far as negatives go, really the negative would be, maybe it doesn't grow at all. And the other thing is maybe the oil price continues to decline somewhat. But that's going to cause a lot of havoc in other industries, in the oil industries as well. It could happen though. So those are the kind of the downside risks. I think oil prices are probably very close to where they should be. And in the long run, if you held onto this stock a long time, oil prices probably rebound at least to where they are. So the bull thesis, the negative thesis of this would be you could hold onto this stock for a long time. Its dividend would pay very well and probably increase. And then, the stock price would probably be worth about the same. And then the positive case is that you could have all sorts of growth for this company's revenue. And so you have a great dividend. If you bought at the right time, it would have already made good money. And then you have a chance for a lot more money. So I kind of think that's what Warren Buffett's thinking about this. And since he bought it last quarter, he could have got it for $35, which would have meant a dividend of above 4%. And the stock has already appreciated more than 15% from that point. And I kind of see the stock as fairly not fair, a little below fair value. So I don't see that it's a bad company to buy. I don't know that it's going to be an outrageous return, but definitely not a bad, a very safe bet, I think. So I could personally, I don't know that I would buy it at this price. I don't know if there's a big enough moat of safety at the current price. I think there was when Warren in December. And currently, I would value this company around $51, maybe a bit more. But definitely one that if you did buy it, you could easily hang on to it for a long time and not really feel that bad, because you wouldn't lose money really on this company in the long run. At least that's the way I see it. just kind of thoughts I have, and maybe, you know, if Warren Buffett buys it, maybe it's something to look into and research a little bit more for yourselves. So yeah, I would love to know, do you guys think Suncor was a good pick by Warren Buffett? Honestly, like, his company has purchased this company before in 2013 and sold in 2016, so I think this might be just a play where he might sell it again unless he sees a lot of improvement in, you know, I guess if the stock goes up a lot, really high, but he sees some kind of negative headwinds coming, he'll probably cut that stock, is my guess. But yeah, he did the same thing. It was basically valued very similar as in December as it was in 2013. And so very safe. But yeah, I don't know. You guys have any other opinions on this, or do you think Warren Buffett could be wrong? I'd love to know your comments. Feel free to leave them below. Otherwise, thanks for watching, and we'll see you in the next video.